Welcome to this week's crypto update. So what's been happening in the crypto world? Well, it is a huge amount. Stick with me, a lot of information to cover here. But the summary for me is, if you're not feeling bullish, why not? Let's have a look. So the Fed holds steady. What's that mean? They didn't increase or decrease interest rates. Why? Well, during the Fed's press conference, Jerome Powell shrugged off economic concerns, claiming that Trump tariffs will have a transitory effect on inflation. I'll come back to that. And said uncertainty around the economic outlook has increased. The committee is attentive to the risks on both sides of its dual mandate. So its dual mandate is bring inflation down to its own target of 2% and try to ensure that the overall jobs market and the US economy holds up, ideally in a strong position, but certainly not in a weak position. And how does it react to both? Well, if inflation, for example, is going up, it would increase interest rates to try and make money more expensive, to reduce spending, which would then bring down inflation. On the other side, if the jobs economy is really strong, then they're in an okay position to raise those interest rates to fight inflation. On the other side, if jobs and the US economy is starting to show a lot of weakness, they can reduce interest rates in order to make money cheaper to help the economy bounce back. So, in the current position, it's seen that the economy is holding relatively strong, though showing some weak signs. On the other side, inflation is going up. So in one instance, it would be their job to increase interest rates to fight that inflation. On the other side, if the economy starts to slow down, it would be their mandate to reduce interest rates. They can't do both. Which will they move towards? Which will become their number one? Will it be save the economy or reduce inflation? And I think in his comments here, a lot of people are saying that they believe inflation is going up or will continue to go up because of Trump tariffs. But if you look in here, they believe that's going to be transitory. In other words, that it'll only be a short amount of time and it should return to the mean. What that tells me is they believe they're not going to have to act in order to tame inflation, therefore don't need to increase interest rates. But they've also stated they can see some signs of potential weakening economy. That would suggest that they are still thinking that they're going to be reducing interest rates in maybe the not too distant future, but they'll react to what they see in the figures. Let's see. On from there, Powell noted it was his base case that any tariff-related price increases would be transitory, last a short amount of time, and so the Fed was likely to see through them rather than fight them as legitimate sticky inflation. So in other words, they won't need to deal with it in their view, despite the fact that it's at 2.9%, nearly 50% more than their target of 2%. Also, they announced that they are actually reducing their quantitative tightening. So quantitative tightening is negative for risk on assets like the stock market, like crypto. In this, they've announced that they are reducing that. So in other words, this is the final stretch before the Fed ends QT, which would be usually positive. The cap of to the sales of Fed balance sheet was 60 billion last May, then down to 25 billion. They're just announced they're going to reduce that to just 5 billion. Signs are looking good for quantitative tightening to end mid-year. So this would be it's already been seen as being bullish. The fact that the way they're speaking about the economy and that it's more likely that they'll need to help the economy than fight inflation would suggest reducing interest rates. Reducing interest rates is positive for risk on assets, the stock market and crypto and so on. At the same time, reducing quantitative tightening, and who knows, maybe quantitative easing comes next, i.e. money printing, which of course is massive bullish for crypto and the likes. So what comes next? In any case, it's clearer than ever that Trump's fiscal policy, what he's doing with tariffs, etc., rather than Powell's monetary policy, up or down with interest rates, is driving the economy and the markets. So for the last number of years, it's been all about the Fed. Whatever the Fed decide to do, the markets tend to move in step with it. As they say, don't fight the Fed. Whatever way the Fed's moving, invest accordingly. Whereas now, that table seems to have turned, and it's more now seen as being more important as to what Trump is doing, and that the Fed are going to actually be reacting to that. I'll touch more on that at the end. That means the Fed will have to react to the decisions of a president whose ambitions is to go far beyond short-term stability in the stock market. He's making it really clear he has bigger goals set, and the stock market is not his main concern for now. Other big news in crypto in general. XRP surged 10%, well, it's about 7% as of now, as Ripple claims decisive win over the SEC regulations. So the SEC's appeal withdrawal marks a transformative moment for Ripple, setting a precedent for future crypto disputes. On top of that, we have seen the SEC drop nearly every one of its big cases it had against the major US entities that are involved in crypto. This has been happening for many weeks. Ripple has just had its go too. At the same time, we've had the Minnesota Senator propose Bitcoin Act after going from a skeptic, one of the biggest skeptics out there, to now a believer. Minnesota State Senator Jeremy Miller has made his state the latest to float and investing in Bitcoin after he went from being highly skeptical to a crypto believer. So more and more of these states are now floating the idea of having Bitcoin as a reserve within their state. On top of that, we've seen MGX, an Abu Dhabi sovereign wealth fund, invest $2 billion in Binance for a minority stake. The transaction will be 100% in crypto, stablecoins, marking it as the largest investment transaction done in crypto to date, and this is the first time that Binance has taken any institutional investment into it. I would say watch the space with regards to Binance and other projects built on top of Binance. This could be an interesting move and gives them a lot of funding moving forward. Bear in mind, they had to pay out over $4 billion about 12 months ago in order to pay off for regulatory issues that they had in place. So again, hugely bullish news for Bitcoin and for other cryptocurrencies as we see here. What else? Well, Ethereum also. We've been talking about Ethereum for a while. There is going to be a big move here in the not too distant future. Crypto Ethereum whales, that's defined as whales with 10,000 to 100,000, 1,000 to 10,000 Ethereum in their wallets. Well, people with that number are increasing dramatically, as you can see here in the red circle, over the last number of months. So while Ethereum has been going sideways or maybe even down in price, the whales are buying it up at a huge rate. Big news for it. And then Bitcoin versus global money to supply. So we've touched on this quite a number of times, but we can see here the green is the money global into money supply, and as you can see, it's starting to move upwards. Bitcoin tends to react to. You can see it's a very close reaction to this, but it's with a 3-month lead. So this is Bitcoin put on top of the global money to supply, but at a 3-month lag. So you can see that based on that, it follows it very closely. We've already seen, from where the blue line is now, the Bitcoin price, if it's to continue following it, it could come down a little bit further, go a little bit sideways for a while, and if it's to follow this into money supply up. What might that mean for Bitcoin price? And it gets even more exciting. Institutional investors. Breaking. So the Coinbase study finds over 75% of institutional investors are to increase their crypto exposure. So according to the study, 83% of institutional investors plan to increase their crypto allocations in 2025. This wasn't done with just 10 or 20. This was a study based on 352 institutional investors, including a mix of all those already invested in digital assets and those yet to enter the market. 83% of the institutional investors plan to increase their crypto exposure this year, and 59% of investors aim to allocate more than 5% of their assets under management to crypto in 2025. This is a huge potential inflow into the crypto space. Is it all going to go into Bitcoin? 73% of institutional investors hold currencies beyond Bitcoin and Ethereum. They're already holding more outside of that, and 68% of institutional investors are interested in altcoin ETFs pending SEC approval. So they're waiting for new cryptocurrencies to get those approvals, and there's a huge amount of ETFs have been proposed and put forward, and we'll see, I believe, many of those will get approved during this year. So what's holding them back? The challenges, still regulatory clarity, and we know there's a huge amount of regulatory clarity already brought into place and much more expected under this Trump administration. If that comes into place, it opens up the door, it reduces the challenges, and opens up the door to institutional money coming in and at a huge rate based on the study we've just seen. The other thing is volatility. I believe the more institutional money that comes in, it will automatically reduce the volatility anyway, because most of these buyers are buy and hold, so they're not just buying and selling later, they're going to be buy and hold investors. And the other one is the secure custody. That's a concern for 33%. And again, by having ETFs out there, it covers the custody part because the ETFs take care of that, and it also takes care of the regulatory clarity part because ETFs have passed regulation. So you can see as ETFs get approved, both the existing ones but the additional ones that look like they're going to come, it brings more and more money into the crypto space, which can only be net positive. So you would say that's enough positive news for one day, but no, Michael Saylor once again is in here. Not this time for buying though. They did buy another $500 million worth of Bitcoin just recently, but that it's even more bullish than that. Recently he attended an exclusive dinner in Miami, surrounded by fellow billionaires and sovereign wealth fund representatives. There, Saylor made one thing clear: Bitcoin is unstoppable. And in his quote, Bitcoin is going from 200 billion to 2 trillion to 20 trillion to 200 trillion. That's a lot of X's up from where it is right now. Who was there? Was it any Joe Soap? Absolutely not. It was the chairman of the Saudi Aramco, who oversees 100 billion fund. There was 50 plus Middle Eastern sovereign wealth funds, 150 plus billionaires, a collective net worth in the tens of trillions, all listening to Michael Saylor explain to them that Bitcoin's unstoppable and it's going to extraordinary heights from here. Do you think they're going to start looking at buying into this? And of course, as that regulatory clarity comes into play and those custody options are in place, I think this is just absolutely opening the door to a huge buying pressure coming into Bitcoin. Why hasn't that happened yet? So on top of all this huge amount of additional interest that looks like it's going to come flooding towards Bitcoin and more, at the very same time, I've already shown you Ethereum whales, buying up in a huge way right now. Well, also we see with the Bitcoin supply, the movement there is reducing ever more. 62.6% of Bitcoin supply has remained untouched for over a year. So imagine, while Bitcoin has increased in value and has been volatile in the past year, nearly 2/3 of all Bitcoin has remained untouched. So we're looking at people who are buying and holding for the long term. That and to put that into context, Bitcoin's 21 bull run market peak, this metric was much lower, meaning fewer investors were holding through the volatility. What that tells us is, since 2021 in that bull market, moving to now, there is far more Bitcoin unavailable to buy. And at the same time, we're seeing this huge amount of potential interest in institutions and Michael Saylor's audience, controlling tens of trillions of dollars, all looking at Bitcoin and how they can get involved with Bitcoin and beyond into the altcoins. If history tells us anything, this level of conviction has often preceded Bitcoin's biggest rallies. These are game-changing positive developments that should put Bitcoin trading at 150 to 200 grand today. This is according to Matt Hogan. Has been so much fundamental positive news, it's just been buried sort of in the background. There's been the strategic Bitcoin reserve. There's the SEC pulling back on essentially every lawsuit. Touched on that. There's progress on stablecoin legislation. I'm going to touch on that in a second. There's talk of market structure legislation, more regulation put in place, which opens up the door to all these institutions. And there was, of course, the White House Crypto Summit. And of course, we have Donald Trump now as sitting president at a crypto event, also speaking about crypto and what's coming next from their side. We are on our way to where I think we'll be at the end of the year, which is Bitcoin at 200,000, and that's according again to Matt Hogan. So what is going on and why, with all of this positive news, are we not going absolutely through the roof on Bitcoin price and crypto in general? Well, it is back to what we spoke about earlier. Trump is more in charge here than anybody else, exactly the way he wants it. He was pushing the Fed to reduce interest rates in the interest of business and the overall economy in the US. But also, there's another big reason. The US has 9.2 trillion of debt to refinance in 2025, and 7 trillion of that is in the second quarter of this year, which of course we're fast approaching. They need to have the interest rate lower, and it's the 10-year treasury yield is the one that they need to get down, and they want that sub 3.5 or maybe even down to 3 or lower. How are they trying to do that? They're trying Trump is creating this mass uncertainty in the marketplace, be it, fighting with Zelensky in public, on live TV, whether it's of course, the Trump tariffs, which is creating huge uncertainty in the market. It's causing the stock market to come back, crypto and the likes coming back despite all the positive news that we see coming out week on week. What I've just shown you is just from this week. We've shown you hugely positive news for the last number of weeks. And all at the same time, we have Bitcoin that has pulled back and shown massive uncertainty. So what Trump needs to do in order to refinance this debt is to get these numbers down. If you look at the average interest rate on Treasury debt over the last 24 years, you can see that the average is in around 3.5%. It was okay back in 2010, for example, for the percentage to be 3.5%, or as you can see, it was up as far as 6.5% back to 2001. But that's when the US had just a few trillion in debt. And in fact, back as far as 2010, it was still under 10 trillion. Now, it has more than doubled from 2014 to 2024. It has more than doubled from going from 18 trillion up to 36 trillion. 3.5% on 10 trillion versus 36 trillion is very different, and they need to get this number down in order to bring their average down and refinance that debt. This is something he needs to make happen quickly, and this is why I believe he's really actively going out, creating uncertainty in the market in general, in the hope to get these rates down. And of course, he has Elon on the other side, taking jobs out of the market. The US government has been one of the biggest employers over the last 3 or 4 years. That has helped with the jobs numbers. Elon is doing the opposite. Instead of increasing, they are now decreasing the number of jobs brought out through government. This is likely to reduce job numbers overall, show a weakening in the economy. At the same time, inflation will be going up through Trump tariffs. And in those circumstances, if the Fed are seeing that the rise in inflation is not their main target as the jobs, then we could see the interest rates reducing, which is exactly what Donald Trump wants for both the refinancing of the debt, but also creating the right situation for the US economy to thrive. All the while, you have both Europe and China absolutely busting to start going down the line of quantitative easing to drive both of their economies. But they're afraid to do that just yet, while the dollar is still, while it has weakened, it's still stronger than they would like, because if they do a huge amount of quantitative easing before the US does, they're in danger of losing the peg. So they're going to want to see the US reducing the interest rates, maybe even move into quantitative easing before they then do it too. But imagine if they all start quantitative easing, in around the same time, that's going to bring absolute massive liquidity into the markets. We've seen what happens Bitcoin when that happens. And at the same time, you have all these institutional investors, billionaires, sovereign wealth funds, all looking to come into crypto. This is teeing up, in my opinion, to be one of the most bullish, probably the most bullish situations we can ever hope to have. Long-term, 12 months, 2 years, 3, 4, 5 years down the line, I think we're going to see much bigger prices for Bitcoin. That, of course, does not mean we can't have a pullback along the way first. Base case from me, some sideways action, a couple of stronger dips down, trade sideways until we see the likes of the tariffs being removed, which I think will happen, the likes of the Fed starting to reduce interest rates, maybe even move from what's left of their quantitative tightening to quantitative easing, signaling the rest of the world they can do the same. Huge liquidity coming into the market, and I think you know what happens next. So huge opportunity. And here we can see Bitcoin and crypto in general was climbing rapidly we've had this significant pullback, but at the very same time, we see USDT and USDC climbing absolutely rapidly. In other words, they can see that demand is coming, and they're creating the stable coins to back that up. So what we're saying here is fundamentally it's going up, but just because of sentiment, it's going down. Once the sentiment swings, when all what I mentioned before happens, then I think we see this reversal in a massive way. But that does not mean it's going to happen today or tomorrow. So on top of all of this, the Bitcoin Strategic Reserve of the US, many people see it that they're just going to hold what they have and not add more. That is not what some are predicting. No one knows exactly how the government is going to acquire more Bitcoin, but it's obvious that multiple government agencies are working to get more Bitcoin into the Bitcoin Strategic Reserve. And Bitwise, guy Hunter Horsley commented about Bohein's interview yesterday. When Bitcoin is at 200k, we will look back on March 25 and say, how was everyone not buying? It was so obvious. Is it obvious? Most people seem to have a negative sentiment at the moment. Really worried about where the overall market is going. Have we missed a bull run? Are we going into a new bear market? I certainly don't believe so. Of course, no one knows for sure, but it's my base case. Sideways action, altcoins to come back a little bit further. Unbelievable opportunity. Probably, a year, maybe the best opportunities we'll ever see to get into really fundamentally strong altcoins and maybe some Bitcoin. And when this turns, it's going to turn in a huge, huge way, in my opinion. Not financial advice, do your own research, but there is huge upside to come. And again, I'll just touch on this last thing that Matt Hogan said, and we'll touch on it again. With so much positive news coming out there, why are things not moving? They're not moving because of the background of the macroeconomics. Macroeconomics have never had, in my opinion, such a stronghold over what's happening in general risk on assets, but certainly crypto. When that gets removed, we see a reversal to the upside like we've never seen before. Hope you found that useful. Talk to you soon.